because again, taxes are your biggest expense. Okay. So if you can save, 10,000 or 20 or 50 or millions of dollars on your taxes, then it's a massive ROI on your money.
Hey, everybody, welcome back to another episode of the Richer Geek Podcast. Today we have Mark Miller. He has over 30 years in the tax finance services industry, helping his clients grow and protect their wealth. He has worked with hundreds of business owners, physicians, executives, high net worth clients, cutting their taxes significantly. He helps them grow and protect their business retirement assets in good times and bad. But he's not just a CA, he's just not an advisor. So we'll get to know what Mark does and how well he does it. How you doing, Mark?
I'm doing great. How are you?
Doing good, doing good. Thank you for coming on. I always like to
My
start the
pleasure.
podcast, give us a little bit of your background, your history, and how you got involved in a very famous family.
Yes, absolutely. Well, I'm the manager of the Hilton Family Office. For those folks that on your podcast that don't know what a family office is, probably a lot of them do. But basically, it's a bunch of wealthy people get together and they bounce ideas off there of each other. They have advisors that work just for that quote family office and cut cost, all of that type of thing. So I'm the manager of the Hilton Family Office. But today I'm here in the capacity of a spin-off company that I've done with Brad Hilton, who is the grandson of Conrad Hilton, which I'm sure many people have heard. He's the patriarch of the Hilton family. And Brad and I started a company called Hilton Tax and Wealth Advisors. And our whole concept has been to bring these high-level family office strategies more down to Main Street or the average investor. So you don't have to have 20 or 30 or $40 million to participate.
Yeah, and that's good because that would limit your participation, your clientele by a lot. If you say, "Hey, we'll talk to you if you're worth 50 million or more." Um,
Right.
so bringing it down to the rest of us is good. So tell me, what is the importance? Everyone has a CPA, whether it's H&R Block or whether it's a CFO. Tell us the differences between you have your regular CPA and then maybe people that maybe specialize within the CPAs. Um, at what point do you think you need to start thinking about something other than just your bean counter CPA, normal CPA?
I think if you have a company that's making maybe 500,000 a year or more in revenue, which is not a ton,
Mhm.
but you're also maybe at an AGI level of 300,000, 250, 300,000 and above, you need some more advanced help. And we're very fortunate to be partnered with the Hiltons because they are considered kind of on the institutional side of the business, the best tax mitigators, really probably that has ever existed in America. They've done it remarkably well over the years. And what we do is plug our clients into the Hilton Financial Network to take advantage of some of these more advanced tax mitigation strategies.
Now, what is your when someone goes to your website and they want to sit there and say, "Hey, you know what? I'm interested." Do you have kind of like a minimum worth or business acumen? Is there something that's like, oh, you know what, you need at least assets under management or something of X
Yeah,
amount of dollars? What
yeah.
is,
On the tax side, I kind of just mentioned those
yeah,
minimums, but then we've really brought it down to a relatively, and it's still not, I'm not going to say this is not a lot of money, but we work with folks that have 250,000 or more. Now,
mhm.
obviously, we have a lot of clients that have a lot more than that, but if you have 250,000 to invest or more, we'll get into some of these advanced wealth planning strategies that again come down from the family office because that's really Brad Hilton's and I passion. That's why we're doing this, and we're both spending so much time growing Hilton Tax and Wealth Advisors, is because we do have this passion, this desperate passion to get out to as many investors as we can that they can invest so much better to where they'll pay less in fees, they'll have less volatility, they'll have tons more safety in their portfolio, and in the long term, they'll make a lot better returns. Just like basically the model of the wealthiest of the wealthy, how they invest. So we've deliberately kept those minimums pretty low
Hmm.
because we want to be able to help folks and help them, get wealthier faster with in a much more efficient way with the strategies that we use.
And let's talk about a little bit. People probably don't know what those strategies are or even what you do. We're used to, okay, end of the year, here's my box. Go at it, and you get your draft, you get your return. There it is. You either owe or you get a refund.
Mhm.
Um, you take it up to another step, with talk about really what an advisor does, the meetings, the plannings, the consultations.
Well, back to our tax planning side. First of all, it all starts with designing a formalized tax plan. We all have a formalized business plan. We usually have a marketing plan, all of that. But actually, the biggest expense of your life is your taxes, and nobody has a plan. Their plan is to go to a CPA, cross their fingers. Well, I'm not going to say cross their fingers. Most people believe if they're with a good CPA, that CPA is saving them everything you possibly can, right? That's not the case. They're usually
Right.
just doing basic compliance work using an advanced version of TurboTax, which, by the way, Intuit does have an advanced version of TurboTax for CPAs. Usually, what it has attached to it is just a little CRM so
Mhm.
CPAs can keep track of the hundreds of tax returns that they do. So it starts with, on the tax planning side, it starts with that formalized tax plan. And then we have some basic bulwark strategies that we get much deeper into the code than just say your mortgage expense deduction or home office. And by the way, there's three different ways that you can take deductions in home office. People only usually use one, or
Yeah.
most CPAs only use one, whereas other ways you can save a lot more money if you utilize, and the IRS says we can do that.
Mhm.
Um, Fringe benefit strategies, various of these kind of like deep code strategies. And then we'll layer in there advanced tax mitigation strategies, which usually come from our family office. Some of them, a lot of them are proprietary in nature, but some of them aren't. And then we'll layer those on top with those bulwark strategies. Our goal is to get everyone to a zero tax bracket, because what's our goal with Hilton Tax and Wealth Advisors? Bringing the family office concepts down to Main Street, and almost virtually no family office member in the entire world pays a lot of taxes. And
Mhm.
most of them are in the zero tax bracket. So we're teaching folks again at a little lower investment level or a lower income level how to do that. So
Yeah.
anyway, we do with various strategies, and we don't guarantee everybody's going to get to a zero bracket, especially the first year. Maybe we'll save you about 50% or so in your taxes by putting a formal plan together, and then we'll gradually layer strategies and get them to a zero tax bracket, as my book is called, The Tax-Free Business Owner. So that's what we want to get people to.
So, within that book, and we'll talk about it a little bit. It's kind of funny. People talk about it's like going, you make all this money, you don't pay any taxes. It's just not fair. And I'm like going, well, I do pay taxes. I just I have a good CFO or CPA, tax advisors, that where I get it back through depreciations or through tax deferment and things like that. So there's this common mistake that the rich don't pay they don't pay
Don't
taxes.
pay their fair share. There we
They don't
go.
pay their fair share. And it's like, well, they pay 98% of all of it. They just get depreciations and they have smart advisors. So talk
Yes.
a little bit. It's like, at first all of a sudden I heard about cost segregations. It's like, why aren't you doing this? Why aren't you doing the self-directed this and setting up all these different things? And I was like, well, because no one told me
Yeah, that's
that I
right.
could even do it.
You don't know
Uh,
what you don't know, right?
Right, exactly. So, how can people now? You're talking about setting up these little things, but what does it really mean? We're zeroing out your taxes. It's not you're not paying it. People think, oh, I don't have to pay taxes.
Well, let me tell you, and let me go back just a little bit to your first comments there. Studies have been done on this.
Hmm.
At certain levels of income, and I mean, I'm talking about often the ultra rich and all of that, for every dollar they save in taxes, it means 10 plus dollars that are put into the economy. Okay,
Yeah.
now think about that. So instead of paying the government giant chunks of money,
Yep.
that what it does is it helps us all by the wealthiest of the wealthy paying less in taxes because they're the smartest of the smart people. And it's not, and I'm not going to dispute that maybe some of them are greedy and might be taking the people a little bit, but that's a very small percentage
Hmm.
of people. And I mean, I work with people that have hundreds of millions of dollars, and they're incredible, great people that are doing great philanthropic work. The Hiltons are great. All of them are great people. They're doing good things. And so then it comes back to what's your fair share? Well, I would rather we don't sit there and go, what's your fair share because you're a billionaire? I would rather save that money, save that person as much money as we can. And then ultimately it cycles back to all of us in the economy via economic growth. If we have more economic growth, then guess what? We keep our taxes down. So anyway, so let me dispel that myth right off the bat
Yeah.
because people don't think about it. They listen to the politicians and they listen, oh, that guy's not paying any taxes. He's a cheat and he's ripping people off. That's a misnomer. And they know it. The people at the
Yeah.
highest levels, they know it. So it's just politics.
Hmm.
So when you and I apologize because I lost the end of your question there. I kind of went off on a tangent.
That's okay, and I
It's
love that
okay. It
tangent.
happens.
It happens. It was just some of the different areas of, you have the tax strategies, but then you say, hey, are you taking, you're an entrepreneur, you make X amount of money. You need to not just set it in a bank account, a savings account that makes 0% interest. Why are
Yeah,
you not doing these other things that you're putting it into these different retirement accounts
sure.
that also can help you save money or defer
Yeah.
those taxes? Talk to
And
us
those are
like
some
that other
basic,
side.
yeah, and that's some basic strategies, putting money in
Hmm.
retirement accounts and things like that. We really don't call that tax planning, but it can be part of your tax plan, no
Yeah.
doubt about it. But I kind of go back to the fact that and when we talk to people about putting tax plans together, we always put a dollar value on it.
Hmm.
If you spend X amount and we put this plan together for you, you're going to get, it usually comes out to the largest investment return of their entire lives.
Hmm.
Because again, taxes are your biggest expense. Okay. So if you can save, 10,000 or 20 or 50 or millions of dollars on your taxes, then it's a massive ROI on your money. Okay. So we want to dive deep into some even deeper strategies and more complex strategies that have a lot more benefits long term and can move us towards that zero tax bracket, other than just doing the regular deductions that you get on your 1040. And then usually what CPAs will do, and you know this, they'll say, hey, we want to make sure you have the right entity planning
Hmm.
and are you in the proper entity and put money in a 401k or an IRA. And then they
Yep.
stop
Yep.
and they call that tax planning. And it's not even close to tax planning. It's not, first of all, another thing too, true tax planning is not putting money out to
Hmm.
then get benefits back. Do you understand what I'm saying? Because let's say if you want to reduce if you want to reduce your taxes by like, $3,000, then you put $20,000, you have to put $20,000 up and put it in a 401k. You see what I'm
Yeah.
saying?
Yeah.
So that's not a true in our world, in our kind of advanced tax planning world, is not a tax strategy.
So what would you do in addition to those? Give us
So we're
some
going,
type of
yeah.
an idea.
So we're going deeper into the codes, like the things I mentioned earlier.
Yeah.
We're going deep into the codes and going into those, deeper type of dive strategies. I mean, we have over 130 different strategies we use now, and it's growing by, probably two or three every month.
Wow.
And there's those bulwark strategies that are more direct code strategies. Then we start getting in advanced tax mitigation strategies that are all private letter ruling, case law strategies that we're diving more into the more esoteric kind of strategies. And when I say esoteric, I don't mean like, things you might have heard of before. Many of them you do,
Mm-hmm.
you have. We just talked earlier before we got on air. We talked about a strategy that uses Section 179 and 168K of the codes, gets us accelerated depreciation on different things that we purchase into LLCs. That's a strategy that barely anybody uses,
Mm-hmm.
but we've had tremendous success with that. Sometimes get a 6-to-1 deduction from what we actually put into the strategies for
Yeah.
clients or
Oh,
what they invest.
absolutely. And people don't realize it. It's like, well, what's acceleration, all this sort of stuff. Ladies and gentlemen, I did one cost segregation, and my first year depreciation was over $1 million. It was seven figures.
Yes.
And all of a sudden, the K1s came out, and especially my investors, the people who are in California, were like going, "Oh my God, how much that saved them
Yeah.
because of their taxes are so much higher than the rest of the
Yeah.
people." So it's fantastic. So it's like, ladies and gentlemen, if you're investing, if you have some money, it is, and the first thing people say, "Oh my God, it costs so much money, to hire people like Mark." And I'm like going, what does it matter if I am out ahead? If it costs me this, but he saves me this, is that not worth it, ladies and gentlemen? It's thinking. It's like you'll spend ten
Mhm.
thousand dollars on this, $50,000 on this, but if they can save you 80,000 a year, I every year for the rest of my life because I still come out ahead. Um, what are some of the misconceptions? And when we were looking in your book, that the business owners commonly have about tax planning because they're like, I don't know, just do it. It's like, what are some of the things that you've written in your book
Well,
about? Curious about growing your wealth. The best opportunities aren't always the most obvious. That's why we've partnered with Bob Bernatas of Franchise with Bob. He specializes in helping investors like you leverage franchising, an overlooked but highly profitable way to create semi-passive income. And for a limited time, Bob is giving our listeners access to his course on franchising investing for free. Inside, you'll learn how to evaluate franchises, minimize risk, and maximize returns. This course is normally priced at $499. Don't let this pass you by. Go to edu.franchisewithbob.com/RG and get your free course today.
well, let me say two big myths. One myth is my CPA is doing everything for me. And I'll
Mm,
tell you, folks, we've about 95% of the time we find that the CPAs are not. It's because it's not their model. And I'm going to offer our book to you. We send complimentary to folks. We'll talk about that in a minute. Send complimentary to folks, and they'll understand why that is. People hire CPAs. They're very trusted because for the most part, they're very honest. They do the numbers well, all of that type of thing, and they can trust their CPA.
mhm.
But they hire them thinking, most people, the myth is this person is competent and they are saving me everything possible. No, it's because they're not doing the deeper dives. They're just doing the basic stuff that we've already talked about. Okay. The other thing is a common myth if we do tax planning, that we're going to, because CPAs put this myth out there because they want to keep people in the compliance mode. Let's just do your tax return. Most CPAs, if you show them any kind of strategy, oh, what are they going to say? Red flag. IRS is going to come after you. I can't support that. That's just the way they are. Now, our proactive planning CPAs aren't that way, but most are that way. The reality is by doing a formalized tax plan, you'll reduce your audit risk. Number one, just
Yeah.
off the top, the less you pay in taxes, the less possibility you're going to be audited. Okay. There's several other things. I won't go into those details, but there's several other things we build into the plans to bring that audit risk down. So people are afraid, gosh, if I do something, my CPA says, hey, that'll cause a red flag and the IRS will be after my butt. That's just not reality. That's not how it works. Usually what happens, there are algorithms now, especially with advanced systems they have, when they go in and they analyze a tax return and they've seen certain things you've done that are within the law and legal and ethical, just like we do with Hilton, their algorithms telling me, yeah, you don't really need to talk to this person, because they know they're right. Now, they may still send what they call a desk audit. Here's another myth, that I'll get audited, period. Forget tax planning or anything we would do with them. What if I get audited? They're going to audit me. They're going to come into my house. They're going to come into my business. They're going to do all that. That's the old days when there were 125 million people in the country. The IRS does not have that capacity. They do what's called a desk audit. And I know you know this. They do a desk audit where you get a letter. That's what they call a desk audit. I don't know why they call it a desk, maybe because it comes across your desk. I don't know. They call it a desk audit, or their desk in their cubicle or whatever. And they say, hey, we see that you've done this and this. Please send us supporting documentation. Yep. That's what they all come down to. Oh, you send them supporting documentation. They send you a letter, matter closed, you're done. So those are a few of the myths people have and misconceptions they have about what goes on in kind of the CPA world and the world of getting your taxes done with the IRS.
Let's talk about how can people find you? Your website, the company name, Hilton Tax and Wealth Advisors, hiltonwealth.com, ladies and gentlemen. People go on the website. What are they going to find? How can they?
Hiltonwealth.com is the place to go. I am telling you, kind of over the holidays, and we've done this on purpose, we're making a transition into a new website. So I apologize if there's a few glitches, maybe. Please forgive us on that. But they can go to hiltonwealth.com. It'll pop up there. They can order my latest book, which has gotten really, really good reviews. It's called Hilton Wealth, which is about how the Hiltons have maintained their dynasty kind of nature over the years and how so many of them are still so wealthy, how they invest. And I mean, I do a deep dive into specifically how they invest and how we can help you kind of plug in to the same things. The main book we talked about today, a lot of the taxes, is the Tax-Free Business Owner. Either one of those you can get on the website through the resources section, or there's pop-ups throughout the website. You can read a little bit more about us, read about all our offerings. And, I always tell everybody, hey, get a complimentary book. We'll send it out to you for free. Check us out, and we're happy to talk with you and chat with you and see if we can help you in any way.
Absolutely. And give us a little bit of a nugget that when you first started with the Hilton family, all of a sudden you're like going, wow, these people are smart, or they doing something. What was one of the nuggets when you started getting into their tax and wealth? It's like going, you just started nodding your head and it's like, yeah.
Yeah, I'm nodding my head because I know exactly what I'm going to say here. And
Okay.
This is a big thing. So for many years, I was in the world of equities. And it's all about buying stocks and bonds and all of that, and these managed portfolios and, trying to get the best return you can. Think about it as a retail investor. How do they sell retail investors, say like mutual funds, which is the biggest seller on the retail side? They sell it by the 1, 3, 5, 10-year performance. And in a way, I've always thought, even looking at stocks, well, how's this performed? What's it good? Hey, well, they always say, past results aren't future results, but you still think that way. And the retail world kind of teaches us to think, and the average investor to think that way. What I learned when I came over to what we call the smart money side, and I talk about in my book, The Hilton Wealth, the institutional side of the business, is that the wealthiest of the wealthy first focus on safety and security first. So like you'll see many of these wealthy people, and we kind of designed our true wealth portfolios to mimic this, that the vast majority, like 50-60% of the portfolio is very safe, very secure. So if something really goes off the rails, okay, then we've still got the majority of our money intact. The rest of it, and you'll see with the wealthy, maybe they'll take 15, 20, maybe 30% of it and roll the dice, gamble with it, calculated gambles. Okay, don't get me wrong. So that is the thing, the mindset that I had to change. And it finally was like a light bulb, that just went off in my head and went, wait a second, I can get better returns than I've ever gotten in my entire life by being aggressive and quote, picking the right stocks, doing all that stuff I did for all those years. I can make better and more consistent returns and sleep better at night by the way the richest invest. And that's simply because there's less volatility. Mm-hmm. And so we get better returns generally on the smart money side too. The fees are lower. So anyway, all of those things, it did take a while because I was kind of a stock junkie. Yeah, I did okay, but I made a lot of money. I lost a lot of money. I mean, I just being transparent with everybody. I don't do that anymore. And none of my clients do that anymore. We consistently pretty much make money year after year. And when we do have a tough downturn, it's a very small downturn that is manageable. And then we can get back to even really quickly to start making returns again. So that's the big light bulb that went off in my head. And the nugget that I give people is focus on safety first. The returns are going to come. Focus on safety first.
Absolutely. And ladies and gentlemen, again, it's Mark Miller with Hilton Wealth Advisors, hiltonwealth.com. Is there any last nugget before we leave that maybe I didn't go over, something you'd like to discuss with our listeners?
Well, I would just say this is the time of year. We're doing this around the holidays. Mm-hmm. Just everybody have a blessed holiday. And I pray for your blessings financially too.
Thank you very much, Mark. Again, Mark Miller with Hilton Tax and Wealth Advisors, www.hiltonwealth.com. Sir, it's been a pleasure. Thank you for coming on Richer Geek. Take care.